I want to go through FBT overview. That's really, I do it all the time. It's just 2 seconds just to get you in the mood. What's new in 2020? Talking about parking, fringe benefits, employee and transport costs, ATO focused, and entertainment. If we have time, I'll touch on entertainment. It's very similar to last year, and then we can maybe jump into questions and answers if I see there's probably a few of them there. FBT year hasn't changed. It is still 31 March 2020, you'll be happy to know, or maybe not. Now, if you don't lodge your FBT with a tax agent, then your date to lodge is 21 May. So that is the date to make a payment and the date to actually lodge the FBT. I'll talk about the payment in a minute. Now, at the moment, the actual payment date is the 28th of May if you owe anything on FBT, and the extension is 25th of June if you're with an agent. That's with us. Now, hopefully everyone here is with us because you're logging into the call. There's no blanket extensions at the moment regarding deferring FBT or deferring the FBT payment. Now, if there is a need to defer the FBT for many reasons that the world is falling apart on us, then that is something we can either you can do yourself or we can do for you. So that is if you want to defer the FBT altogether. My recommendation would be that if you can complete the FBT and you have no issues with completing it, I would still provide all the information, make the lodge the FBT with us or you lodge it yourself. And then what we do is we request an extension to make the payment. So the ATO is allowing 6-month payments. They're not charging interest, and if they do, again, we can request remission. It's not a blanket extension. It is case by case. So that means somebody has to call and request it. So if you do lodge your FBT return, and you can, I recommend you do, and then just defer the payment. If you haven't got the money. If you have got the money, pay it, because obviously you've got to pay it at some point. So FBT hasn't changed the rates, so everything is unchanged, so nothing to discuss there. It's still 47%. And if you think about that, it's a higher rate than income tax. So where you don't have to provide FBT, it's probably preferable unless there's some sort of concessional treatment, which would be regarding your motor vehicles, it would be regarding some exempt benefits, etc. So this is for the not-for-profits. They have certain caps. Again, that hasn't changed. Documentation, you still need to keep logbooks, unfortunately, and they're valid for quite a bit of time. So, you know, it just really is important if you're using your vehicle quite a bit. And nowadays, logbooks can be electronic, so they're less hassle to use, but you still have to probably type in something. Odometer readings for logbooks under the old methods you require, and LAFA declarations, living away from home allowance. If you've got that 12-month, which we're going to go through in a minute, or through this presentation, you need those declarations. Just moving on. So entertainment always seems to be the hotspot. I think this year the hotspots are a little bit different. I'll go through that in a minute. But entertainment is always there. I just think because it's so complicated, it's hard to get right. Also practically, it's sometimes hard to do. So the main thing to remember is, are you providing a benefit to your client? Are you providing the benefit to your employees? Two different treatments. If it's a client, there's no FBT, there's no tax deduction, and there's no GST. And you say, why? Well, the Tax Act says that if you provide entertainment, it's not deductible, only in certain circumstances. And where there's a circumstance that you provide a benefit to your employees and tax, and you actually pay tax, meaning FBT on it, then you can claim the deduction. Now, first thing to remember, if you're providing a benefit to your employees, have a look and see if you've got some minor benefit, or there's property benefit, a taxi, travel that's work related, something that's an exempt benefit that doesn't actually pay FBT. Also, you could use an actual method, which is sometimes can give you a better benefit, better outcome. Otherwise, you can use a 50-50 split. And I'm not going to go through that right now. I'll go through it at the end. I think this is really important right now. More than ever, we're going to need to look at these exempt benefits that we're providing to our employees. A lot of us are working from home. We've provided them with laptops. We may have, provided taxi travel to them, home and work, so they didn't have to catch public transport in these times. So I think it's important to have a look at these exemptions and apply them where you can, and know that you don't have to pay FBT on it. So what's new? I mean, look, I think the main thing that's new here is the car parking fringe benefit. I'll go through that. A transport cost, how you treat transport costs for people either relocating, working on different jobs, and also just an extension of emergency services, what that means with the COVID-19. Yes, COVID-19 affects FBT as well. It's amazing. So what there was a ATO indicated that on 10th of March, the ATO said that would defer the application of the car parking fringe benefit instead of starting from 1 April 2020, which has already started effectively, to 1 April 2021. And I think that exemption is there, or that deferral is there to help employers implement this. And I'm going to go and cover this in more detail so you understand what the issues are and what you need to do. Before I go into car parking, I just wanted to highlight that there is an exemption for emergency services. So if you are providing, so an employer is providing emergency assistance to an employee, that could be like a non-cash benefit, accommodation, food, drink, face mask, sanitary items, and the employee is located in a high-risk area and has been relocated or otherwise required to self-isolate, COVID-19, provides these benefits, then they will be exempt benefits. So there are employers providing these benefits right now, so be assured that you don't have to worry about, and you probably didn't really even think about it really, but if you hadn't thought about it, don't worry, it is exempt. The other thing, because of every event being cancelled, you would have found that sometimes the employer has paid a deposit to an entertainment agent. Now, if that payment has been made and it's non-refundable, then there'll be no FBT for the employer. Funny enough, though, it's interesting that if the employer reimbursed the employee, then there could still be an FBT liability, where obviously you don't get the money back on cancellation and so on. So it's whether the employers and an event organizer is involved, or whether it's an employee going out on their own and booking it. Now, most things I think would be reimbursed. I know I've heard that when some wedding planners, some magistrates or photographers, florists, some aren't reimbursing deposits. They're probably smaller businesses and probably not doing the right thing. But otherwise, you don't have to pay FBT on that. So home internet expenses, again, this is a big issue. With flexible working arrangements, a lot of people now working from home for God knows how long, maybe 6 months. And again, you don't have to, no one has said, the government hasn't said you have to work from home. But I think the realisation that public transport might be a bit dangerous for people to be on. So working from home, if it's an alternative, to use it. So when you're working from home, what do you need the most? You need your Wi-Fi, internet. And the question is, what do you reimburse to your employee? Do you, what's the policy? What policy do you have on home internet? Do you pay for the internet 100%? Do you pay them a fixed amount of, say, $50? And you're reimbursing it for business purposes. So you need a declaration, either no private use or otherwise deductible. I think the ATO concern here, and I don't know how hard the ATO is going to go on all this, by the way, but it's just something that's been alerted to prior to the COVID-19 mainly, the ATO concerns, can an employer justify business use? So, for example, HLB would reimburse their staff a certain amount for the use of the internet. The question will be, we get a declaration, but is that enough? The answer from the ATO is no, it's not enough. The reality of it, we have to justify, or the employee has to give us justification of why they think the business use is that or more. And there's it's not an exempt benefit. It doesn't come under, if you get a laptop, unless you get the little dongle with it, and that's part of your salary package. But in most cases, if you're just reimbursing or paying for the internet, it's not an exempt benefit. It's likely not a minor benefit because it's a monthly fee. And if you do the calculation, it'll be more than that, over the 300, inclusive of GST. And what you find now is like us, you have a bundled expenses. You have your Foxtel, your internet, your phone, it's all bundled together. What the ATO is saying that what we should do is separate the items, identify what is the internet that we're reimbursing, and then also justify that. Well, good luck with that. Employees, so what they're saying is employee to keep a 4-week diary. Now, on the FBT guide for employers, there's a section. So if you go to the ATO website, FBT guide for employers, under internet expenses, it explains all this. But effectively, they're asking that the employees keep a 4-week diary. What's how much time they've spent doing work items and how much they've done. I don't know if an employee wants to be truthful on that, but I'm sure they are. Also, if the reimbursement is under $50 a year, $50 a year, really, you don't need to keep anything. The other solution would be that you provide an allowance. So you just say, here you go, $50 or whatever it is a month, $60, $80, and you say, it's an allowance. It's not a reimbursement. I don't need a declaration, don't need anything. Here's just your allowance. You work it out yourself. So then the onus goes on the employee and much less hassle for the employer. So maybe that might be the option. Toll concessions, workhorse vehicles. So we all know what are workhorse vehicles before I dive into it. I'll just go to the next slide to just, so it's the vehicles on the left-hand side of that page, or the wording, I should say: taxi, panel van, ute, dual cab, ute, modified vehicle, other road vehicles carrying more or less than a ton. So it could be either or, but they're not really destined to carry passengers. They're really, they're more like those vehicles that I've mentioned above. This vehicle on your right, that is not a workhorse. That would be a private vehicle. Very logical, right? Also, you need to meet certain other conditions, and I'll go reason why in a minute, but principally, it's designed not to carry passengers, and there's a specific calculation that you do depending on the weight of the vehicle to work out the capacity. Vehicle is provided for business use to perform work duties. So what the benefit of these workhorses are is that I've provided you with some sort of ute, van, under a ton. You travel from home to work. It's not salary package. Usually the value is under the luxury car limit, and your private use is minimal. So they've given us a bit of what the private use should be, and that does not exceed more than 1,000 kilometres in total year, or no individual return journey exceeding 200. So, the question is how you keep maintain this as an employer. There's been some sort of concessional treatment and ruling out, saying that if you meet certain criteria, you don't need documentation, but you don't need to justify it all, get declarations and so on. So that's important if you meet that criteria, but we're not going into that right now. The important thing here is if you do have this type of vehicle, then is a workhorse, and it's not salary package. There's no FBT on the tolls. Okay, so effectively it's saying, and the tolls, you could go through tolls more than 20 times a day. You just imagine all the bridges, M6, all these kind of areas. So this is an administration concession. It's not legislation or anything, but no FBT on tolls for workhorses when for work purposes. or even when you travel between home and work. So someone's in North Sydney, they use the tunnel, but they're working down in Cronulla or something like that. This is a good example. Also, just to keep in mind that a workhorse may be salary packaged. It may not be subject, maybe it would be subject to FBT, whereas the one that's not salary packaged and meets all the criteria wouldn't be subject to FBT. But the tolls in relation to either of those vehicles potentially can be exempt, and only if you, what am I saying? Yeah, forgotten. Oh yes, okay. So it's you would still be exempt even if they're packaged, but you have to have limited private use. So you still have to meet, as a salary packaged vehicle, meet that criteria of 1,000 kilometres and so on. So very important. What was the rules before? I should have mentioned that. The rules before was that you pay FBT on tolls, because it's likely you wouldn't meet the minor and infrequent because you'd be providing toll concessions all the time. So I think that's all I have to say on that. Very exciting. So I want to get to the car parking fringe benefit. So the current rules are, and most of you know the rules, and some of you probably don't even deal with car parking fringe benefit. And that may be because you're a small business. If your turnover is under 10 million, there's an exemption. So you don't even have to go there. And that's where you look first. So if I was talking to you now, have a look, are you a small business, turnover in 10 million? Well, you can probably not worry about listening to the rest of this, but I just recommend you do, because always knowledge is good. Okay, so you've got a car parking benefit if your car's parked for more than 4 hours in a particular spot. The employee travels between home and work at least once that day. The parking is provided to the employee in respect of employment. So it has to be in respect of employment. Car is parked near employee's work on that day. I've highlighted near work because I just think the blue highlight mean these need to be defined further, and they are defined further. And they're the key to these provisions in a sense. There is a commercial parking station within 1 kilometre radius that charges all day fee for more than $8.95. So that's a threshold, $8.95. If it's more than $8.95, then FBT payable. If it's under, no FBT. Or car is parked at a commercial parking station regardless of time or price. There's certain exclusions. So parking for employees with disabilities, religious or charitable educational institutions, so a lot of not-for-profits would be excluded, and the small business turnover. So usually your parking stations designed for short-term shoppers or hotel guests were not considered commercial parking stations, and I'll come back to that. So some examples, there's an employer, might be outside of the city, has pays rent, just has a big premise, maybe owns the premises, has about 20 parking spots, lets their employees use it. Now, is that a car fringe benefit? Yeah, it certainly is. They're not paying for it. It's free. Doesn't meet this criteria of parking more than 4 hours, travelling home, work. The car is owned, leased, provided under employee control. Yeah, might be their vehicle. Might be the employer's vehicle. Parking is provided to employee in respect of employment. Yep, because they're only going there and parking because of employment. It's near their premises. Now the question becomes, is there a commercial parking station within 1 kilometre? Now, before you might even ask that, you might say, is your turnover under 10 million? If it is, you're okay. Now, if it's not, then you go, okay, is a commercial parking station within 1 kilometre? And I've got to say, kilometre is a radius. So you put a pin where you are and just draw a circle around and say on a map, these days, it's so easy to look at a map. You look at 1 kilometre radius, and then you effectively determine if there's a car parking station. Now, the key is, what is a car parking station? And a car parking station is usually, as you would know it to be, a commercial parking station. But what it hadn't included was, because you might have, shopping centres around the place and hotel guests, so you might have hotels around the area, they were generally excluded, but now they're included under these current provisions. which are due to start 1 April 2021. And then you look at, okay, I've got a problem there. And then you look at, okay, do I have all-day parking for more than $8.95? So then I've got to calculate what is the all-day parking for that shopping centre or business or car park station, I should say. So I'm going to touch on these ones a little bit more in more detail, just so you can understand what the rule change has been. So this is the current rule. So the question is, have you already got a problem and you don't even realise you've got a problem? Okay. So it's a bit sensitive here. So car parking benefits, how to calculate. So it's not easy, but let me simplify it for you. You look at your actual method. You pick one of these three at the top, and then you mix it together with the three down the bottom. It's just that easy. The devil's in the details. So the actual method is, well, actually, how many car parks are you providing to how many employees? So that's the question there. 12-week register, as you can imagine, you keep a register of your parking and how many parking spots you provide, or there's the statutory method, 228 days over 365 days. So it takes out the weekends. So that's a statutory. A lot of people use that one because it's the simplest. Then what happens is you go to the valuation method. Now remember, everyone's doing this at the end of FBT. There's no time, and we're going for the quickest method. If you sat down and thought about it, you might choose a different method and you might compare the methods, and that's why it's good you've got a year to think about it. Now, commercial parking stations method is you go to the commercial parking stations in the 1 kilometre radius, so you might have 2 or 3. And that means now you'd be looking at a shopping centre, a hotel, and I'll go through that in a minute. And you look at them and say, okay, what is the all-day rate, the lowest all-day rate? And we'll go back to how do you calculate that, and then look at which is the lowest one. Take that. Is it under the threshold? It's under the threshold. Don't have to worry. But you just show the proof of that. Average cost, as you can imagine, opening and closing, lowest costs for a parking station, and it's the average. The other method is the market value method. So market value is what it means. You go to a qualified valuer and they value the parking station. So you might have parking stations in different states, so you need that valuation. And I do find this is one of the areas the ATO is looking at, the market value method. Okay, car parking benefit, proposed changes 1 April 2021. So again, this is a tax ruling, it's not legislation. Recommend you read it, happy to help you with it. It was going to apply from 1 April 2020, but there was a notice on the 10th of March saying that they're deferring that date to 1 April 21 to give clients more time to think about it, really, because it's a big thing. And I think there's some really good solutions out there. So we can certainly discuss that in a minute. So commercial parking stations also include, so shopping centres, as I mentioned, hospitals, yeah, it's a big one, hotels, universities, airports, and sports stadiums. So that's interesting, right? That covers quite a bit. So if you think you're in suburbia land and you don't have a commercial parking station, like a Wilson's or something, you may be wrong now. So previously not considered parking stations, and it was considered the imposition of penalty rates by a park facility for parking beyond a certain time automatically excluded the parking from being a commercial parking station. So I was in a shopping centre one day, forgot to get a ticket. Then they decided they wanted to charge me $24 for being there for an hour. So, you know, they imposed penalty rates. Of course, I paid. I wanted to get out. Now, also, what was interesting about this ruling is they said that, as if you recall, and let me go back to it so it makes a little bit more sense. So one of the criteria is, we just ran through commercial parking station. One of the criteria is the car is parked near employees' work. Okay, so with everything you say, well, what is near employees' work? Is it just your normal place of, you know, where you actually go every day? So primary place of employment. So one of the conditions of a car parking is that the work car needs to be located or in the vicinity of employees' primary place of employment. And that's pretty easy when you're going to the same place all the time. But what if you're a construction worker and you might work on different sites? So you go and park, and the question is where you're parking, in a parking station clearly, also somewhere where it's allowed to park, and you might be parking there for 4 hours, and then you go to the next site. So you have multiple sites and you might be there 4 hours again or 5 hours. So the question will be that you need to look at, as a construction or a developer, you might need to look at that and say, have I got a problem here or not? And that needs further guidance, I think. So another common example of employees that may have a parking issue would be male sales reps, if they're out there and they're in parking for more than 4 hours. IT consultants, I don't know why they pick them, but maybe because, you know, they might go from one employer to the next. So we discussed those, and then the other one I mentioned to you was, if you looked at it here, you need to charge an all-day fee of more than $8.95. And you can use the car parking station methodology, average cost, or market value. I'm just bringing those up so it makes it easier when I'm explaining this. So what the next point was that when you're valuing a car parking benefit, you can use a special method to convert the periodic fee into daily. So when you go into a car parking station, it's usually the lowest isn't the day rate, it's going to be the weekly, monthly, or yearly rate. So they're saying, okay, yes, you can divide the total fee charged for all day parking during the period by the number of business days, excluding weekends. So if you've got a weekly, monthly, you can actually divide it by the number of days and you get a lower rate. So that's the lowest rate you would use to work out if it's $8.95 or more, whether I pay FBT or not. So if it's under the threshold, we don't pay FBT. If it's over $8.95, we pay FBT. And again, we're not exempt. ATO make it clear you cannot use long-term parking to calculate daily rate, for example, airport car park. So what some employers were doing, we're using some long-term parking. So the airport one that come to mind, I'm sure there's others, and you divide that, and that gives you a really low rate. So what the ATO is auditing at the moment is how you're doing evaluations. If you're using market value, or if you're using, let me just go back to the valuation methods, the commercial parking method, this one here, this one. If you're using a long-term valuation, you can't use it. It's not representative of the actual lowest rate. So that's something to be watchful for. So what's your action plan? What can you do? Because I think at the moment, that's what we have. If you're not providing car parking, I think you need to look at and say, are you providing car parking exactly? You know, you're an employer. I'd first think, is your turnover under 10 million? It is. Don't worry. I'm a not-for-profit. Don't worry. I'm a disabled parking spot. Don't worry. Okay, but if you don't fit into those criteria, I would seriously ask, are you providing car parking to your employees? That means you've rented a premises, you've got 5 parking spots. Take note, have a look at this. If you're providing car parking already, again, I'd review and say, maybe I haven't considered if in 1 kilometre radius I've got a commercial parking station. So I need to really just have a look at that. So put a pin down, draw a radius, work out if you've got a commercial parking station, which now can be a shopping centre, stadium, hospital, hotel. So you're definitely probably going to have one of those around you. Maybe not if you lived right out in the country. Calculate the taxable value of the car under these rules. So as we talked about before, there's 3 different ways you can calculate it, which is the best for you. Consider whether, and one of the ways I thought for some employers is maybe getting market valuations. So it can be difficult to get, who's the commercial parking? How do I know if there's a commercial parking station around? Well, there's different ways. There's a mob called, I think, National Car Parking. I can give you the name if you need it. But he would actually, he's ex-ATO, so obviously he knows the rules quite well because he was working in this area. But he does the valuations. So he would identify which car parking stations are around and provide that lowest rate for a fee. Look, it's not an astronomical fee. I think that if you have car parking stations, you're a bigger organisation in a lot of states, then it's probably worth it. And he'll reduce the rate if you're doing it. He's doing quite a few parking stations for you. I don't get a commission, so I don't care if you use him or not. It's just a suggestion. The other way is just look it up yourself. Look at the 1 kilometre radius and make sure there's no, and drive around or get one of those navy things and look at it up on the, what is it, Google Earth. They're the practical things. Also, do you need to review and adjust your employee remuneration packages? So some of the other things you can do is get an employee to contribute. They're not going to be happy about that, but that might be part of a solution. The other would be to give them a car parking allowance. So you're giving them an allowance, and then they have to work it out themselves. And they probably won't get a tax deduction for it, but it's going to be accessible and you pay BYG withholding. So probably not the best choice. If you can follow one of the above, that's probably better. So if you've got any questions, put it in the questions and answer. This is the part I don't like about webinars. I can't see whether you're all falling asleep on me or not. Okay, so the other topic was, so there hasn't, let me just clarify, there hasn't been massive changes. One of the big ones is the car parking, but the good thing is that deferred it. So one less thing to worry about this year. Employee transport costs. I put this in because it's kind of an odd one in a way. You know that we've got, business travel. So we provide business travel, employee traveling alone, usually without the family, short period, temporary accommodations provided. And what you need is written evidence sometimes. There's no declarations, but if it's over 5 days, you need a diary. So usually no FBT on flights, accommodation, meals, because it's all work purposes and the otherwise deductible would apply. We don't even put it in the FBT. Only if there's recreation or entertainment provided. So there's business travel. And just to recap, there's business travel and then there's living away from home allowance. So employee traveling, so living away from home is probably more substantial than a travel, than when you're traveling for work, business travel. You can sometimes distinguish them, sometimes not so easy. So usually if employee traveling with or without family, often maybe it's unaccompanied, maintains a home in Australia, not rented out. So I'm in Sydney, I moved to Melbourne. I've moved for limited to 12 months. So I've moved there. My contract is for 11 months. I've kept my home in Australia, in Sydney. Maybe considered secondment arrangement, might be a secondment. Exempt payments could include food and accommodation, meaning the employer's provided some accommodation for me in Melbourne and some food allowance. That'd be exempt. It is different for fly in, fly out. So where someone's on a mining site somewhere in the middle of nowhere, they're less restrictive and it's a bit freer. Now, again, substantiation with the living away from home, you do need declarations and it's very important to keep those. If this is applied correctly, it's been reduced over the years. It was much wider for overseas people, but now it's not. There's a significant, FBT reduction because the accommodation and food provided to the employee, and also some of other benefits can apply if you have a LAFA. The main thing here is that if you maintain a home in Sydney, you can't rent it out. If you rent it out, you're probably out. Unless, of course, maybe, you had 2 rooms and before you left, you had it rented to a third party. That's probably okay. It's still your main residence, as long as you don't rent out the other room. So little things like that. What other benefits? These benefits are still there. So when they changed the rules, they didn't necessarily take these out. So from an FBT exemption perspective, if you lease the household goods such as furniture for the employees relocating, relocation transport, education costs of children, meals of less than a certain value, accommodation, removal and storage, connection of household utilities. So, all these kind of things that you're probably all fairly familiar with are also exempt if they come under the LAFA. So you have to come under those criteria first. So you need declarations for that as well. Again, complicated, but it's just something to discuss with us and we can certainly help you through that. So then what the ATO provided was, relocation benefit before I go into what the ATO provided. In relocating with family, moving to new locations, selling a family home, purchasing new residence and entering long-term accommodation, etc. These may be exempt under this relocation benefit. So those are all the things that currently exist. And then what happened on top of all that, the ATO released a ruling as to when deductions are allowed for employees' travel expenses. So this is sort of kind of sits to the side of all the other. So this is not business travel, this is not LAFA, this is sort of somewhere else. And we'll go through that in a minute. So a while back, I think 2018, the ATO released TR 2017 D6. If you ever want to look it up, that's why I put it up there. Otherwise, don't worry. No FBT if travel expenses are deductible. So as you would imagine it, so this ruling covered off transport costs, you know, how you get there, airplane, train, car, accommodation, meals, and incidentals for employees traveling away from home for work purposes. So it has to be for work purposes. It was so complex and they had so many issues with that ruling that the ATO decided to split it between two rulings. So they've brought out TR 2019 D7 for transport expenses only. So this, you look at it for transport only, is it deductible? And I'll go through the scenarios in a minute. And you're expecting ruling, and okay, so the 2020, another ruling will come out on the meal and accommodation and incidental. So they haven't withdrawn TR 97 D6 yet. That will be withdrawn when the other ruling comes out. So at the moment, the two kind of apply together, except there might be some anomalies with one or the other, and I'll explain that in a second. So if you look at it, so this is the kind of transport they're talking about. Employee travel from home to work at the regular workplace. Now, the ATO is just clarified. That's going to work. So that is not going to be deductible. That's for private purposes. Now, it's quite interesting. Through this whole ruling, the ATO distinguishes between employee travelling to work and on work. If they're travelling on work, then it's exempt. You don't have to worry about it. If it's to work, well then, if an employer pays for it, it's private use and FBT would apply. So you need to look at the role and the role of the employee and the contract. So, so does the travel occur on work time under the direction of the employer? Does the travel fit within the duties of employment? And is the travel relevant to the practical demands of carrying out the work duties? If you can find that it answers yes to all those, then it's likely to be traveling on work. But if an employee sort of just decides that they want to, you know, work in a different location, and it's their choice, it's likely to be to work. So you think about it, employee travels from home to alternative workplace. So it may be that he's asked to travel to another place of work on a regular, maybe not so regular basis. Now the question, will that, you know, alternative travel be deductible? In most cases, yes, but that's why you have to go through that ruling. Employee works concurrently between two workplaces where there's overnight travel and then when there's not overnight travel. So again, you need to look at what scenario that fits with your employees. Employees placed on secondment. Employee permanently relocated to work at a new regular workplace. So it's interesting, the relocation or the secondment. So I'm in Sydney, I've moved to Melbourne, and now Melbourne has become my regular place of work. So what they're saying in this ruling is that effectively that is travelling to work and not on work, because that new place has become my regular place of work. If I'm working there for more than 3 months, you know, I'm going there for 6 months, a year, etc. But then you bring in the FBT exemption of relocation costs and potentially the travel to Melbourne and the travel back from Melbourne back to Sydney on the last trip. they would be exempt. But what this ruling, the new one, has said is that the travel in between, back and forth, would not be exempt. So that would be subject to FBT. Whereas previously the ATO had said that travel in between would be exempt. So they've really gone and turned it around. So I'll just say that again because it's a bit confusing, I know. So I've moved from Sydney to Melbourne. My regular place of work has now become Melbourne. So it's a bit like a secondment, and it's more than 6 months or more than 3 months. So there would have been a plane ride to get to Melbourne, and at the end I come back to Sydney. Okay, so they're saying those plane rides are fine. They're exempt under the FBT Act, under an exemption specifically for relocation, for secondments. But the travel going up and down, visiting family, visiting whatever, that is going to be private and not and subject to FBT. So it's not exempt. So I think that's fairly clear. It kind of makes sense. So I don't have any problem with that. So then they've got, scenarios like employees on call. Can you claim that? Employees carrying bulky equipment, and employees traveling between workplaces. So, it's quite a detailed ruling, something worth looking at if you think you've got one of these scenarios. And that's all I was going to discuss on that. So what attracts the ATO's attention? What doesn't attract the ATO's attention? I think, as we talked about it, obviously valuing of car parking, so the market valuation. So making sure that you get a qualified valuer to do the market valuation if you decide to use that valuation method. Employee contributions, making sure they match. So what says on the tax return matches the FBT return. Living away from home, have you applied it correctly? Have you got the declarations? Very important there. Benefits received by shareholders and beneficiaries. Is it in fact a fringe benefit, or does it come under Division 7A, something else? Other thing is the ATO is fining people for getting this wrong. In the past, they might have been a bit lax about it, but misconception not claiming entertainment deductions alleviates FBT requirements. So if you are entertaining your clients and you go, oh look, it's so small, I'm not going to do an FBT return, or I don't have to do an FBT return. Well, if it's only clients, that's fine. But you still need to consider if you're providing it to employees or to employers. And usually you don't entertain your clients without you being there anyway. So, there's always an employee or a director that's an employee involved in that entertainment. And so what they're saying is that in some cases, some employers would just say the whole lot, oh, let's just add it back. Let's not pay FBT. Let's not claim it as a tax deduction, and let's not claim the GST. Simple, right? Let's keep it simple. What the ATO is saying, no, if you don't get that right, they will amend it and they will penalise you for it. So in other words, you really do need to consider whether you're providing entertainment or not. Internet connection costs, well, the reimbursement that we talked about, documentation, how do you keep a diary on that, or your employees do? Non-lodgement, again, that's the non-lodgement of the FBT. If you don't lodge your FBT return, you don't have an assessment. So that means the ATO can go back as far as they like when they're auditing you. So you might need to consider that if you don't want to lodge your FBT return. Failing to report employees' private use of car. So again, if you're providing cars to employees, and it's in the company, you really need to look and say, do you need FBT on this? Is there some sort of exemption where you don't have to pay it? And if you're providing a workhorse vehicle, yeah, you'd probably be entitled, but you just got to go through the criteria. It's just painful, I know. Okay. And so just on the last leg before we go to questions, because I want to leave a bit of time for questions, I'll just jump through this for 2 minutes and then we can go straight to questions. Investigate entertainment. So last year, look, we talked about this. What is entertainment? It's a bit of a refresher. You can keep the slides and then use it at your own leisure. So remember, entertainment is that definition of entertainment by way of food, drink, and recreation. Accommodation, travel with providing the entertainment. So you need to look at why you're providing it, what you're providing, when you're providing it, and where you're providing it. And it gets complicated. So really have to sit down before you provide all this and have policies and procedures in place. As you recall, and this sort of says the same thing as I just identified, as you recall, we did a FBT matrix. Happy to provide that to anybody that needs it. It was just to assist, to work out if you had, if some expense you had to pay FBT on it, was it, income tax deductible, and did you have GST? Like, I've been doing this a long time, so it comes a little bit more fluid. But when this is FBT comes around once a year, it becomes a little difficult to employers to remember all the rules. So hence why I've included this again, is really just to cover off, some of these things. So remember that there's a minor benefit exemption. A lot of people go, oh, that's all minor benefit, don't worry about it. But just to refresh, the minor benefit is under 300, provided infrequently and irregular. So the taxable value of the minor benefit and other similar or identifiable benefits is low. Likely taxable value of the minor benefit or other is low. I think I've just said that twice. Great. Just noted a mistake in the slide. Thank you. Difficult to calculate the benefit as a result of contingency, unexpected. So that is the under 300. So I provided some flowers, somebody's left, under 300. That is entertainment. Is it entertainment? Actually, probably not entertainment. That'd probably be deductible. That's another issue. And if you're a tax exempt employer, you have to remember you're limited. You don't get the regular minor benefit exemption. Special rules. So as I was talking before, entertainment, does a gift constitute entertainment? Yes or no? So it's important because if it's not entertainment, you look at under 300 and you can potentially claim it. If it is entertainment, then you really probably can't claim it. You might be FBT exempt if under 300, but it won't be a tax deduction to you. So good to read those and go through that matrix. I think I've covered these, so I'm not going to cover these again. I don't know, bore you. Flowchart, minor benefit for not-for-profits versus for-profits. I think this is a good flowchart for those of you that have forgotten what the minor benefit is, whether you're a not-for-profit or a for-profit. So use that whenever you have time. So what I am offering, like I offer every year, is a complimentary meeting. That is to, discuss your FBT needs, and also to discuss whether the car parking benefit, there's something we can help you with there. So I guess before we go to action points, let's go to action points. I guess really it's more an FBT health check. Look at your car parking there. Maybe just do a car parking fringe benefit health check. If you don't want to do an FBT check because you think you've got it all under control, just remember about the car parking. Have a look and see if that applies to you. Also, call your advisor, whoever your advisor. If you don't have one, call me. Call to discuss government initiatives. There's a lot of stimulus packages, not really FBT related, but it's top of mind right now. So it's very important that we're all across it. So I'm just going to go to questions.
Regarding toll concessions, workhorse vehicles, is this new to FBT this year, and what cause is FBT AA?
Yeah, so this is an administration concession. So it doesn't sit in the Tax Act. It's in the FBT. Yes, it should apply for this year, and it's in your FBT guide, so employer guide. So if you go to FBT employer guide, Justin, you can see it there. Again, it's an administrative concession. This is not a tax ruling or a legislation change.
Yep. Catholic schools are classified as not-for-profit. Do schools have to pay FBT from 2021 parking in a shopping centre car park?
So as I mentioned, there are exemptions for not-for-profits. So it's likely that you'll be exempt. So you don't have to even look at these concessions. So one thing I think, if Catholic schools, I think you'd be not-for-profit, so I don't think you'd have to worry about it. If you want to get assurance, it can certainly just have a look at the provisions and show you that it does fit.
Okay, this person has two questions. I'll just go ahead with the first question. If we had work drinks once a month, would that cost be FBT able because reoccurring, or can we divide by the number of attendees? And the second question is, how do we identify if a restaurant meal is entertainment, enjoyable, infrequent? For example, if a manager has 4 meals out a year.
Yeah, yeah, good one. Yeah, look, there is some in-house fringe benefits. I think that would certainly fit within the drinks at work would probably be regular, once a month. You know, it's kind of a consistent thing. And yeah, so work drinks you might decide divide it and it's under 300. Likely, you know, you won't get a tax deduction for it, but you know, you might come under the exemption. If you divide it, like even in providing it once a month, if you divide it and it's under the 300. Sorry, let me start again. If it's a minor benefit, right? For minor, it can't be infrequent and regular. So I don't think you would look at the 300 if you are providing this on a regular basis, which you are. It's not that clear, the legislation, but I would say that that doesn't come under the 300, and I would say that's not deductible and subject to FBT. That's the simplest way to look at it. Another thing that is, if you're using the 50-50 method, you don't get the minor benefit exemption. So what method are you using? Maybe more the question. How do we identify if a restaurant meal is entertainment, enjoyable? Yeah, it's always, because I know sometimes you might not enjoy yourself. I don't go to the restaurant unless I'm enjoying myself. But I would say that, again, you have to look at who you invited to the restaurant. So if a manager goes with his staff and it's 4 times a year, and it's ad hoc, it's not regular, so there's not like a time in the diary all the time, then potentially if they all add up, they could be under 300 per person. Potentially that could meet it. Again, though, if you're using the 50-50 method, you're not likely to meet the minor benefit. You can't use it. So then you just put it all together in the P&L. Hope that answers it. If not, just call me after this and anonymous, we can talk.
Okay. Is the under 300 exception per person or the entire expense?
Now, it is per person. It is per person, but you just have to remember that if it's entertainment, you need to look to see what method you're using, whether you're using an actual method or a 50-50 method. And that's why I say go back to those tables. I'm sorry I didn't go through them in detail. Because I know I did that last year and I just didn't want to bore you again. And I wasn't sure whether you'd be interested. But the tables are there and they do explain it quite good. So if you go through it and if you're having problems, just give me a call.
We have a third question from Anonymous. I still find it hard to decide if something is entertainment, if alcohol is provided equals entertainment.
Yeah, so look, they have different scenarios, and we have provided an FBT matrix to clients, and that really identifies, so you can identify if you're providing the entertainment just to employees, where you're providing the entertainment, and it's based on, there's an ATO ruling which discusses what is entertainment and what's not entertainment. So I'm happy to give that to you. So if you get in touch with Tanya, she can send you a copy of that. And I think that's really going to really help you, because we could sit here for hours and it still be difficult. It is quite complex. The ATO is looking at updating that, so it'll, I don't know, make it simpler. That's a question. Whenever they do anything, is it simpler or is it more of a burden? So I hope that helps.
Yep. A question for BPI and not-for-profits. Is the 300 minor gift benefits not applicable to BPI and not-for-profits?
Yeah, so the under 300 works differently for not-for-profits. So that's how I've got tax-exempt body entertainment in that matrix. So if it's incidental entertainment not considered consisting of a meal, other than light meals, then you don't have to worry, no FBT. But if it's a function recognising an employee's achievements, there would be, there could be FBT on it. So, sorry, in that case there isn't. So it's really quite strict and specific. So that's why I think if you're not for profit, you have to consider whether the minor benefit will apply to you. So if you go back to those tables that I will be sending out to you, sorry, you haven't got them now, so that's why it probably makes no sense to you. So if you go to the table once we've provided the slides, it really outlines the fact when you can and can't. So entertainment provided to staff is incidental to the entertainment provided to outsiders and does not consist of meal other than light refreshment. So, you know, your staff is attending a fundraising event that they have to attend, and it may be not a sit-down gala dinner, but just a light refreshment, then you don't have to worry about FBT. Okay, but functions held on business premises recognising the special achievements of employees. So relating to the employment of the employee, that employee will get the exemption. Otherwise, no, the minor benefit doesn't apply.
Okay. I've got another question here. Is Uber travel between employees' work and home covered by FBT exemption?
Yeah. So currently, no. So the legislation is before Parliament, and Parliament is sitting tomorrow, and they're only sitting tomorrow to pass the stimulus package and the government, you know, basically the JobKeeper. So Uber travel at the moment Uber is not considered a licensed vehicle. So outsourcing or what they call, I can't remember the name now, but Uber travel in itself is still not FBT exempt like the licensed vehicle. There is legislation coming out, but it'll apply when that's given royal assent, and it hasn't been effectively passed by Parliament, which hasn't been done yet.
She means ride sharing as well.
Ride sharing, thank you. Yeah, thank you, ride sharing.
I think we've got time for just one more question. I lodged FBT return, which is still a PEPA return. Will ATO go online launchment?
That's interesting. Well, we lodge only electronic, so is it just because you're lodging paper? I'm not really, I don't really know your circumstances, Arthur, so probably best to either speak to me or who does your FBT return, which might be me. But no, normally we lodge electronic FBT returns, so it is available. Maybe it's just you haven't linked yours to the business portal.
Are minor benefits also applicable to charities?
Well, no, you don't get the under 300 exemption. If you go back to my slide on that, yeah, it's very limited, the exemptions you get if you're a not-for-profit.
Yep.
But remember that not-for-profits, you know, have other benefits as well. So that might be a one-on-one discussion.
The next question is it correct to assume that any Uber usage during the 2020-21 FBT year will still be taxable under the existing rules? That is, they are not taxis?
Yeah, so I think the legislation is still in progress, so it's still floating around Parliament. So effectively, yes, it's only when it's passed it'll be considered an exempt vehicle.
Okay.
But again, you know, is the ATO going to chuck resources at that right now? And again, it looks at, you should consider obviously how much of an Uber, Deborah, your Uber expenses are. Because if it's large, I'd pay attention to it. But at the moment, the legislation hasn't passed, and it's only when it passes, and I'll be notifying everyone when it passes, you know, it'll go through one of the HLB EDIs.
No need to lodge FBT return if no FBT liability?
Well, what you need to lodge is a no return required. So what we do with our clients is that two things we do. One is we say no return required. That means we've never lodged really an FBT return, or if we have, there's really a no liability, and we know there's no liability and we feel safe about that. The other thing we do is we sometimes lodge just an FBT return with nil in it, so we can trigger an assessment. So that might be your better option, is to just lodge a nil tax return.
Okay, next question. What if there are no commercial car parking spaces within 1 kilometre?
You're home and hosed, you're fine. Yeah, so I think that if that's the main thing, that was the main trigger. One of the criteria is that you had to have a commercial parking station within 1 kilometre. If you don't have a commercial parking station, you don't have car parking, so you don't have to worry about it. I think the concern might be that what wasn't a commercial car parking spot is now a commercial car parking spot. So the question would be more, do you have a hotel? Do you have a hospital? do you have a shopping centre near you that now are considered commercial parking? If you don't, then you don't come within these rules and you're okay. You don't pay FBT.
Yep. Next question is, car parking FBT, is there an exemption on charities?
Yes, so I did mention that in the slide that certain, yes, charities that come under Section 50, income tax exempt, would be exempt from the car parking.
And I think we have time for one more question. It's come through the chat box. How can we elect 50-50 method? Any form of process is required by ATO?
Yeah, so usually, look, there is an election done when the FBT return is done, and, it's declaration and that's automatically printed out. But the other way to do it is just to show it on the tax return itself. So on the tax return, it shows that you're using actual method, which is an expense payment fringe benefit. So when you're using entertainment on the actual method, you just go expense or reimbursement or property. Your entertainment sits sort of in there. If you use the 50-50 method, then you use that box right down the bottom to fill out your FBT return, and that's sort of indicating you're using the 50-50 method. So it can be done by putting it in the tax return if you haven't made an election to that effect. But you can also make an election.
Sorry, Marianne, we just got one more question.
Sure.
Car parking 10 meters threshold, companies grouped for threshold?
Yeah, good point. Is the turnover test under 10 million? I'm not really sure, actually. I just, top of mind, I can't recall if it's grouped. I don't think it is. I don't think it is grouped. But if I can come back on that point, there's been so many aggregated turnover tests that, honestly, I've slipped my mind. Let's just say here, employer. Yeah, aggregated business turnover. That makes sense, right? So aggregated business turnover less than 10 million. So aggregated means that you look at connected entities. So if you're controlled, so more than 40% is owned by someone else, another business of your business, you connect their assessable income to yours. You look at their turnover and count it all together as part of that under 10 million turnover.